Rachel Reeves has confirmed what had been rumoured for a while, that the government is U-turning on its politically toxic cuts to winter fuel payments. But the government has spent more than 6 months justifying the cuts on the basis of trimming down government spending. So now the leadership has lost the standoff with Labour backbenchers. How exactly is the Treasury going to pay for it? A spending review on Wednesday the 11th of June will set out plans for how much is spent on each department. It has been suggested that the government could revise funding pledges on housing, policing and education in order to keep public finances in check. Think tanks have argued for targeted policies to protect the public purse. The Tony Blair Institute has argued that the government could yield £11 billion in savings from investment in AI. And the Institute for Fiscal Studies has said that tough choices on Wednesday are unavoidable. That's because Treasury officials will be looking at how they can meet their own fiscal rules, which is to deliver a current budget balance on a rolling 3-year, forward-looking period. The other rule is to lower the level of net financial liabilities. In these terms, every billion or £1 million extra of government spending can count a great deal. £2 billion on winter fuel payments may not seem like a lot given the size of the UK economy, but Chancellor Rachel Reeves is struggling to manage more deep-rooted problems in the UK. The UK national debt stands at around £2.8 trillion and could yet rise closer to 100% of total GDP by 2030. Due to high gilt yields and raised interest rates, the cost of servicing debt is now around £100 billion, around double the defence budget. And if government spending on defence is set to increase from 2.3% as a share of UK GDP to as much as 3.5% in the next 10 years, then more savings will have to be found and growth will have to surge. If Reeves cannot find quick savings on Wednesday, taxes may have to go up. Income tax thresholds could be frozen for longer than Reeves said last autumn, which could drag millions more people into paying more. Reeves has not ruled out this tax rise, and little has been said on other potential tax hikes proposed by the Deputy Prime Minister Angela Rayner. This includes extra taxes on wealth, shares listed on a junior stock market, and reinstating the pensions lifetime allowance. Businesses complain the £20 billion tax rate on employers announced last autumn has damaged UK growth prospects, and they could raise more concerns as other taxes kick into effect. Prime Minister Keir Starmer has said himself the government cannot tax its way to growth. For everything you need to know about this story as it develops, head to cityam.com.